Hello, good evening everyone. Welcome back again to my weekly market outlook. Me SK again. Welcome. Alright, so we are looking at August week 2 for this week. So that will be from August 8 all the way to August 12. Alright, now how is market moving right now and what we can expect for this coming week, which is August week 2. Let's just roll in and look at it on how we are going to analyze our chart for this week. Alright, so now before we go on further, let's just take a look on what happened last week. So just before taking a look at what happened last week, let's look at what I actually mentioned in my last week outlook for August week 1 outlook. What did I mention? Okay, just let's take a flashback and look at what I actually mentioned. It's going to be a sideways market yet again for the week. Alright, so as I said, it's going to be moving sideways again. We could see another flat week for August week 1. Yes, that's exactly what I mentioned last week, that I was actually expecting the market to be flat. So what actually took place for last week, which is August week 1? Just let's go back to our usual sector and we can just take a look. So S&P 500 just moved around 0.43%. That is almost flat movement yet again, and I was correct based on my outlook for last week. 0.43%, in even that is mainly boosted by what took place last Friday, our non-farm payroll jobs number. Yet again, the non-farm payroll actually was way better than expected. Alright, so if we were to look at it, the analyst was actually expecting about 180,000 new jobs were actually added, but instead the market blew away the target and actually recorded 255,000 new jobs added. Thus we could see the huge jump on last Friday. So that actually gave the most of the movement for last week. Alright, and end of the day we still had a flat week, so that's a total move of 0.43%. Now in terms of the other sectors, we could see all the other sectors over here. Obviously, because the good jobs numbers, that means the expectation of increase in interest rate is going to come sooner than expected. So any increase in interest rate will always benefit financial sectors. So financial services and financials is up as expected. And as usual, when interest rate goes up, utilities, real estates will get a hit. So again, they are down as well. Now, so that was basically what took place last week. Consumer discretionary and consumer staples continue to be just flat, and the leading sectors is financials and of course technology as well. Now if you're going back to the jobs number, this is exactly what moved the market last Friday. So we are backed into a uptrend kind of a movement right now. For the last 2 months, the numbers have been reported more than 200,000. For June was 292,000 and for July 255,000. Both months are beating the analyst estimates. Alright, so that is what basically took place for last week. So we saw the S&P moving around 0.43% and the jobs number as well been better than expected as well. So where does this lead us to? And as well, in average earnings per hour has also shown some improvement. It was estimated was actually 0.2%, but the actual number was way higher, or actually slightly higher, around 0.3%. So all are good. So market moved on Friday. So that is basically what we have for last week. So that's what basically took place. Apart from that, there was no major events that took place. England actually cut its interest rate from 0.50 to 0.25%, but again that is pretty much expected. So market was pretty flat still. Now let's get back to this week. Let's look at our SPX chart as usual. Let's plot our support and resistance and look at the trends as well. And then finally we come out with our market outlook for August week 2. Now I'm going to look at SPX. I'm going to look at what happened last week in terms of support, resistance and trend. Then I'm going to talk about the outlook. After that, I'm going to talk a bit about the US dollar and the expected hike in interest rate. And then based on that US dollar, I'm also going to talk about slightly on the effect on the oil price and as well as gold price. All right, this oil price and gold price has been gaining a lot of attention lately. So let's just roll in and talk about it as well. Now for this week, SPX August week 2, before we go into the outlook, let's just draw our usual support and resistance. Nothing much has changed. So resistance turn support, we are still looking at roughly around 2130. Remember, I'm still looking at SPX weekly chart over here, right? 2130 is still an untested weekly untested resistance turn support, and apart from that, we do not have any other resistance so far. We had a small resistance over here, which is roughly around 2177, but even that, the market has actually taken over 2177 as of last Friday after the jobs number. So in terms of support, we are looking at still the same over here. Resistance turn support around 2130. Other resistance are over here. So that is roughly around 2045 to 2050. Alright. So that is another level that we are looking at. So whichever is support, I'm going to change that to my usual color, which is blue in color. So this is what we are looking at, 2045 and 2130. I'm still waiting for the market to come down to 2130, but that looks like it's not happening anytime soon as well. Looking at this, let me just remove. I don't see this as any resistance so far. So market has clocked as another historical high as of last week, which is 2182.87. Week in, week out, we have been clocking in new historical high again and again and again, and this is the fourth week continuously we have been clocking another historical high. Will this ever come to end? Yes, it is. It's going to come to an end soon, but let's just take a look first on all the other parts of our chart. So in terms of trend, we know it's obvious that we are in an uptrend. We had an up move over here, and then it came down, slight retracement, and now we are in the next up move. So that is basically the trend. The short term is still on an uptrend. Long term as well is still in an uptrend. Support and resistance identified. And in terms of the technical outlooks, in terms of technical indicators, we still have our moving averages supported over here, and then here is our 20 weeks moving average. So our 20 weeks moving average is still rising up, but I'm still expecting the market to come down to test this, but when, I'm not sure yet. So in terms of the other indicators, MACD or even check-in money flow, all are showing bearish divergence, but the bullishness in the market is still very high, thus it's holding the market right now. So that is a quick summary of what the chart is showing us right now. And let me just move on straight away. I'm not going to talk much about what happened last week apart from the jobs number. So I'm going to talk about what we can expect for this coming week. So this coming week, which is August week 2, from August 8 to August 12, I'm going to highlight few stuffs over here. Now, if you just look at this weekly chart, I'm very sure based on this movement, there are some people who are going to say the market is very bullish and is going to continue the trend for now. But based on what I am seeing, this particular candle, alright, let me just highlight it. This particular candle that you are looking at, this is a similar pattern to what we saw last week and I highlighted last week as well. So this was like a hanging man, a doji hanging man. Here again, it is actually a hanging man. Nothing much has changed. We had an uptrend movement, a strong uptrend movement. The candle became smaller and smaller and smaller. You can see clearly the candle's body are getting smaller and smaller and smaller. And over here, the market moved down during the week before it gains back up and closed at the historical high. This kind of pattern is another typical weakness candle in the trend currently. So we had 2 weeks of continuous weakness in the SPX chart, or in terms of SP500. So yet again another hanging man. For this coming week, for August week 2, I'm going to say this. The market is almost 90%, I'm pretty sure that on Monday it's going to open higher, and even Tuesday is going to open higher as well. But I am expecting sellers to come in and push back the market to be flat yet again for August week 2. Listen carefully. I'm going to call for the market to move higher at the initial part of the week, probably Monday and Tuesday. But after that, the sellers are going to come in and push back down the markets. They're going to take over all the sellers. They're going to take over all the buyers, and then the market is going to close flat yet again. Alright, so that is my weekly market outlook. Why I'm saying so is definitely because of the weakness in the candlesticks that we are looking at right now. So because of the weakness in the candlestick, I'm going to call for another weak candle for this week as well. It's going to be a flat week. Starting of the week is going to move higher, and probably it may even close down for the week, but it's not a huge down move just yet. Alright, because the number of buyers still high, so it will definitely, sellers will come in, they will take over, and it will close flat for the week. Alright, so that is pretty much what I wanted to say about for August week 2. Before we move on further, let's just take a look at the daily chart. If you look at the daily chart, we are looking over here a nice rebound from the 20 days moving average. So as I highlighted last week, the market is pretty much stuck in this range earlier. So it was between 2177 to 2175, and as well as around here, which is 2160. So you could see all the movement over here. And then on, if I'm not wrong, this was on a Tuesday. The market moved down. It looked like as though it just broke through the 2160, but then it rebounded beautifully from the 20 days moving average. And then the market kept on Thursday, still above 20 days moving average. And then on Friday, because of the job number, we saw this huge Marubozu, which has mean it has broken above our short-term resistance, which is 2175. Based on the movement from the 20 days moving average, thus I'm saying the buyers still exist in the market. There's a lot of bullishness in the market, but because of how much the amount that it has moved up, and because of the weakness candle in the weekly chart, I'm going to call for the market to move higher at the beginning of the week before closing down, probably in between 2175 to 2160 again for August week 2. Alright, so that's about typically a summary of what I'm expecting for August week 2. In terms of technical indicators, we have looked at MACD, we have looked at everything. MACD is showing some weaknesses in terms of the daily chart. The bearish divergence still exists in terms of weekly chart and such. Now, let's go back to US dollar, because I highlighted that I wanted to mention about US dollar. After the good jobs number, we saw a huge move as well in the US dollar. Now, if we were to look at this chart, the US dollar is pretty much stuck in this particular range. You can see over here, this is our range over now, around 100. And as well as the lower part, which is the support, is roughly around 92. Now, what we are looking at right now, if you could see this pattern, is pretty much a very, very interesting pattern. I'm going to call for the market to move, I'm going to call for the US dollar to move higher for this coming week. Why do I say so? Is because of this simple reason. If you look right now, this yellow line, this is actually the 100 days moving average, 100 weeks moving average for US dollar. And each time it comes down to that 100 weeks moving average, the US dollar basically bounced back. So if you could see over here, we had a strong down move, almost near to the 100 weeks moving average. Then we had another rebound and the uptrend continued. And then we had another big, huge down move, came down to 100 weeks moving average, and then it started rebounding as well. And as of 2 weeks ago, we had another strong down move, and now last week it rebounded again after the jobs number. So if we are going to see the same cycle to continue, we are most probably looking at US dollar to take back above, to move back above 97.5 and probably come to our resistance, which is could be roughly around here. This is another resistance that US dollar need to take it before it can move back all the way to 100 value. Alright, so that is what I wanted to mention about US dollar. Alright, every time it's touching in the 100 moving average, 100 weeks moving average, it rebounds and moves and does another higher high. So probably I'm looking at around 98.41 before it could actually take $100. Why am I expecting the US dollar to move higher for now? It's because based on the good jobs number that has been reported for the last 2 months, the good numbers of average earnings per hour that has been growing, the expected hike in interest rate should come sooner or later. So if I am going to show you all this, now if you see this is what basically they call it as Fed Watch tool, and you can actually get this in a CME Group website. It basically shows on what is the level or current probability of when the market is expecting Fed to increase their interest rate. Alright, so we have all the over the months over here, September, November, all the way up to July 2017. So if you could look at it right now, after the jobs number, the market is expecting for the interest rate to hike up pretty much around 15% from the previous probability before the jobs number, which was around 9%. Now it is expecting for a 15%. Expected rate increase in September is up to 15%. Basically, this shows that the hike in interest rate will never take place coming September. So if we move down to November, all right, again for the interest rate to increase, the market is expecting about 15% probability for it to increase. So again, it's not going to be increased as well. But the biggest difference right now over here is for coming December. Previously, the market was only having around 29% probability of Fed increasing their interest rate. But right now, it has moved up all the way to 38.4%. That is a huge up move in terms of this probability. And if we could see another a good jobs number in coming months, then we could see this 38.4% overtaking this 25 to 50 points probability. All right. So that is why the US dollar is pretty much strong right now, and that's exactly why I'm expecting US dollar to move higher for now. Now, apart from the US interest rate that we have just saw and how it's going to affect US dollar, I'm expecting US dollar to move up for this coming week. It is highly important that we look at how US dollar is going to affect the gold price and the oil price. So, anytime we always know that whenever US dollar has tendencies to go up, gold actually moves down. That can be clearly be seen over here in our gold chart right now. That what we can see over here, let me just expand slightly over to the right side. So when the US dollar went up as of last Friday because of the goods jobs number, we had gold moving down. So that is what we could see over here. So the long-term support for gold is right now 125.41. I strongly think that the gold will actually retest this support. In terms of long-term, I'm still pretty much bullish about gold, but for short-term, we may see some bearishness kicking into the market. So we could see the gold coming down to around 125 to around 124 because of the move in the US dollar right now. And you could also see that in terms of the MACD histogram over here, that the market is showing some bearish divergence. The MACD is showing bearish divergence. Despite the up move in gold, the MACD is actually moving, the MACD histogram is moving down and down and down. And the trend line is also looking like it's going to make a crossover anytime soon. So that is the short-term bearishness in the gold right now. But in terms of long-term, I'm still bullish about it. But in terms of short term, it's going to be bearish. Now, let's also take a look at the oil price. This is our light sweet crude oil futures. What we saw is this. Now, when US dollar goes up, basically it becomes quite expensive for anyone to buy an oil, any countries to buy oil. So the demand becomes lower. Now, if you could see over here, the down move after a huge uptrend, the down move right now, and now in terms of weekly chart, we actually formed almost a hammer over here, which means it's actually a bullish signal. So that is for oil price, a bullish candlestick. And if you could see, this candlestick actually formed exactly at the previous support, which is roughly around here. So this is our support, the historical support, and this is where the market performed a bullish candlestick as well. So if I just changed it to blue, I have to change the blue. Any supports has to be in blue. So over here, we could see a huge volume for the last week's movement. The market went down all the way to $39 and then moved back all the way to almost $42. So this basically signifies a bullishness in the oil price. But because of the rise in US dollar for now, any up move in oil is pretty much limited. But at the same time, if this is going to take place, Take a look at this, alright? This is what I'm expecting. US dollar is going to move up and oil price going to take not going to take a hit, but it is basically going to have a lot of pressure from the US dollar move. So the oil price could just float around here for now. But after that, once the US dollar starts moving down back, because long term US dollars, I'm still bearish about it. This is probably what we are going to see. Let me just try to show to y'all on what do I mean by that. So if you could see over here, what may take place in oil price is that this is roughly around what we call as the long-term resistance. If you could see it, this is a shoulder, this is the head, and we could probably forming another shoulder over here. This is a chart pattern that we call as inverse head and shoulder. Inverse head and shoulder is a bullish chart pattern that I may see taking place in oil price. So this is the first shoulder, and then we have the head, and then we have another shoulder which is forming right now. Any break above this $49.99, or just put it as $50, going to be a huge bullish signal in oil. So those anyone who wants to get into oil stock, who wants to get into oil index or whatsoever, if you are not in right now and you want to be pretty safe, you could wait till the market breaks, the light crude oil breaks above $50. If it breaks, then I'm going to call for a really long-term bullishness in the oil price. So that is what I wanted to mention about oil price. So we have taken a look at the SPX. We have seen on our weekly chart, we have seen it on the daily chart, we have seen the US dollar, we have also seen the gold price, we have seen the oil price. So that is pretty much what I wanted to share to you all about how am I expecting the market to move. Again, as I mentioned earlier, I'm expecting the market to move higher on Monday before the sellers coming in on the rest of the week and moving market back down, or pretty much closing flat for August week 2. So that is basically what I wanted to mention in terms of the market moving news that we may expect for this week for August week 2. The news that may move the market will be first, it will be US July retail sales report. So that will be coming out on Friday around 8:30 in the morning. So the consensus forecast is that the report will show retail sales rose 0.4% last month, a slight reduction of the compared to the June, which is 0.6%. And about core sales are forecast to inch up 0.2% after gaining 0.7% a month earlier. Alright, so rising retail sales over time correlate with stronger economic growth, obviously. So while weaker sales signal a declining economy. Alright, and remember, consumer spending accounts for as much as 70% of US economic growth. Apart from that, we have Chinese trade data, German second quarter GDP, June UK manufacturing production, and Reserve Bank of New Zealand rate decision. That the Reserve Bank decision for New Zealand will be interest of any those who are into forex. Alright, so apart from that, the only news that we need to pay special attention to, which is on Friday, the US July's retail sales report. Okay, alright guys, so that's about it. That's all I have for you all for this week. And as usual, if you have liked my video and if you enjoyed and you find it useful, please share it around. Please share it in Facebook. Till then, I meet you all again next week. Stay informed, stay invested. Thank you very much. Signing off, SK.